Yo, everybody, back at it once again. Your favorite investor's favorite investor, your boy official Tyree Samuels, right? And as I told you guys, I'm going to be picking back up my consistency so you guys don't have to wait an entire 30 days to get another video. So today we're going to be back at it with the series I've been telling you guys about. We're going to be dropping videos nonstop every single week about the setups that I'm taking. You know what I'm saying? I will eventually start doing the setups that I don't win as well as the setups that I do win so you guys can see the full transparency. So today we're going to be talking about how I caught a total of 800 pips on gold, right? The thumbnail says 220, but we're going to talk about that on the next clip. I'll see you guys in a little bit. Peace. Yo, everybody, back at it once again. Your favorite investor's favorite investor, your boy official Tyree Samuels, right? Now, before y'all go any further, do not forget, go ahead and hit that subscribe button because you know, like how I know, don't you want to be the first person to get the notification? You don't want your homeboy like, yo, bro, Tyree dropped a video yesterday. You're like, oh, man, I ain't even see it because I'm not subscribed to his page, okay? Now, with that being said, guys, before we go any further, please make sure y'all go ahead and hit that thumbs up and hit the like button so that YouTube sees I'm providing value so that they keep promoting my videos so that y'all can keep making money from watching my videos, right? Now, without any further ado, you guys already know, as I was speaking on previously in last videos, right? I'm gonna start doing a series where I'm going over the setups that I've taken, okay? So if any of you guys want to be able to take advantage of the setups that I'm gonna be talking about, all of which I may not send out, but most of which I will, please make sure you guys tap into my Telegram chat, okay? So my Telegram chat is actually gonna be in my Instagram bio. So what I want you guys to do is I want you guys to go follow me at official Tyree Samuels on Instagram. And then from there, I would like you to go click on the link in my bio and then select the free Telegrams link so you guys can start taking advantage of all my signals, okay? In the future, I'm gonna definitely start having everything accessible in my bio and description, all that good stuff, but help your boy out, right? So we're gonna be talking about gold today. So I know a lot of you individuals love trading gold, okay? So for those of you guys that do not know, I only trade Forex pairs and I only trade gold. I didn't say commodities for a reason. I don't trade silver or nothing like that. I trade gold and Forex pairs. I don't trade crypto. I invest into it. I don't leverage trade it. And I don't trade indices, okay? That's just me. So it's very rare that I actually get an opportunity on gold because gold doesn't give me a whole lot of opportunities based off of how I like to trade, okay? But if you guys are looking at the current position on the screen, you can see that short position ended up showing a lot of profit that gold ended up dropping. So what I'm gonna do is we're actually gonna go over this shorting opportunity. Now, I know that the thumbnail says 220 pips, but I made the thumbnail basically whenever take profit one was hit, and obviously it just kept dropping. So I wasn't about to, make another thumbnail. That's unnecessary. I could just let y'all know I made 800 pips whenever you log into the video, right? So we're about to go ahead and break this down real clean and efficient. Like, so the way that I like to trade, I tell people a lot. My trading style for the most part is way that I look at it is fairly simple. Now it might be difficult to other people depending on how you look at it. So one of the first things I like to be able to use is whenever I'm flipping through different time frames and looking at different currency pairs, okay, I like to be able to utilize the 1 hour time frame, right? So what I'm gonna do is, I'm gonna hide all this. So what I like to be able to do is I like to be able to use the 1 hour time frame. Now, the major difference for me than a lot of other traders, I usually do not do a top down analysis, right? So I'm not starting from the daily being like, okay, let me see the overall trend and then going to like the 4 hour and being like, okay, let me see what the current market structure is. I'm not trying to talk down and I'm not trying to say that you shouldn't do it. I'm not trying to say it doesn't work because it clearly works. Just for my trading side, I don't necessarily need to trade like that, okay? I can start looking at the overall structure once I figured out if I even want to participate. I don't need to look at the overall structure to figure out if I want to participate. If that makes any sense, I don't know. So a lot of the things that I like to be able to look for is, if you guys look down here at my indicator, okay, this is going to be called a TDI. Now, I don't need you guys to worry too much about how the TDI works or anything like that. I just need you guys to focus on a couple things I'm going to show you, okay? Because I'm going to make a separate YouTube video 100% going into the TDI so you guys can understand. So the TDI works similar to the RSI. So probably the easier thing to be able to do until I make that YouTube video about the TDIs, I'm just going to show you guys the RSI because it's damn near similar, if not the same, okay? So one of the things I like to be able to look for, and this might help you guys because I'm a reversal trader. So what I've started to identify is I usually am catching the reversals from the overall trending move. The overall trending move on gold is what? It's obviously bullish, okay? Obviously bullish. It doesn't matter who you ask or who looks at it, from what time frame, it is bullish. So if you guys see that I actually took a selling opportunity, that means that I would have been a counter trend trade, which is okay as long as you know what you're doing. If you know you're taking a trending trade, that's cool. If you know you're taking a counter trend trade, that's cool. Just as long as you know what it is, that'll help you manage it, right? So you might not want to swing trade a counter trend position because it may eventually keep going in the original trending direction because you are just taking advantage of the retracement. So one thing I like to be able to utilize when I'm looking at the RSI is going to be two different things, okay? I like to be able to utilize divergence, right? And also like to be able to utilize the extremes. Now, what I mean by divergence and the extremes. So the first thing I'm going to talk about is divergence. So another YouTube video I'm eventually make is going to be over divergence. So the easiest thing you guys can do to be able to detect divergence is if you guys look right here where the candle chart is, you guys can change it from candles to lines. So you guys can actually change it from candles to the line chart. Whenever you change it to the line chart, it's going to give you a better visual representation, right? That's going to be making it look a lot more similar to the RSI versus you having all the wicks and all that other kind of stuff. So the benefit of the line chart is that, I got some of my mouth. Benefit of the line chart is that this is where the market is opening and closing. The wicks are not going to be actually where the market opened or closed. That's what's happening as the candle is fluctuating. So this is going to give you a better overall gauge of price opening and closing. So the way that you guys can detect divergence, right, is going to be like this, right? So divergence is going to be pretty straightforward. I like to be able to utilize indicators to detect divergence. There's some people that don't use indicators, or some people that are just against it. It's neither here nor there. I'm going to use an indicator because it's easier. Easiest indicator used is the RSI, right? You don't have to change any settings on the RSI. The way it comes standard with the 70-30, I'll show you guys right here. The way it comes standard with the 70-30, keep it like that. All right, you can change the colors if you want to. The way it looks like now is fine for me. Okay, so for me, what I like to be able to identify is divergence. I don't always get it, but when I do, right? Like the Dos Equis guy, I don't always drink, but when I do, right? So I don't always see divergence, but when I do see it, it's on and popping. Okay, so divergence is going to be whenever you see the market going in one direction and you see the RSI or an indicator you're using to identify divergence going in another direction, right? So basically what I mean by that is if you notice that the chart is going up, so from this point to this point, you guys can clearly see that the market is going up. So what I'm actually going to do is I'm going to take the highlighter tool and we go hit them with the bada boom. Let me actually change that color to yellow. That is not bright enough. There we go. So we go hit them with the bada boom and then bada bing, right? So the thing I want you guys to be able to understand is if you guys look at these 2 points that I've just identified, from here to here, the market is going up. But for whatever reason, if I were to take a vertical line and show the exact areas that this is going to equal on the RSI, why is it that the market is going down at the same time this is going up? That is going to be divergence. So whenever you see the market going in one direction and the RSI is not following, that's usually going to be divergence. Divergence is a really good indicator to be able to utilize. If you are trading reversals, you can also use it in trending markets. But me personally, I think it works the best for reversals. It gives you a stronger confirmation. So that's one confirmation that I had, right? I usually use quite a few different confirmations, all of which I may not be going over on these calls, but I'm going to give you guys the most important ones. The next one is going to be the extremes. So remember I mentioned the extremes, right? What are the extremes? The extremes on the RSI are going to be this. Whenever you guys see this purple box that I'm in, you can change a purple box to a red box, a blue box. It don't matter. For me, it's a purple box. Whenever this white line comes outside of the purple box, whether it be above the purple box or below the purple box, those are going to be the extremes. What does that mean exactly? The extremes basically mean that a lot of times, whenever you see the market go outside of the box, eventually it has no choice but to come back inside of the box. So what that means is if you have the market go outside of the box in the upward direction, what does it have to do to be able to come back inside the box? It has to come down. So it has to come down to come back in the box. That means that you might see some type of selling momentum on the actual chart resembling the RSI coming back into the purple box. Now, on the opposite spectrum, if you have the RSI come out of the purple box on the bottom end, what direction does it have to go to be able to come back in the purple box? It has to go up. So if you guys look at this example right here, notice how at the same time the RSI dipped out of the box and came back in, you started seeing buying momentum that never came back, right? So those are going to be two of the confirmations I like to be able to utilize on the RSI. It's going to be divergence as well as the extremes, okay? Now, the next thing I want to be able to show you guys is going to be the way that I start looking for, an opportunity to possibly get into the trade. So the next thing I want to be able to show you guys is The 1 hour time frame is basically how I look for all my setups. The majority of all my setups, whenever I'm scanning through the market, I'm looking at the 1 hour. Okay. From the 1 hour, whenever I see something that I like, I'm then going to start scaling through other time frames to see if I can potentially find an entry. Okay. So for me, the way that I like to trade is whenever I can detect the extremes being hit, whenever I can detect some type of divergence, I'm then basically going to be looking for a reason to get in the trade. Okay. It doesn't mean I'm going to automatically take it, but now I'm looking for a reason to get into the trade because I already have two of my most powerful confirmations, the extremes and divergence. So one of the things I like to be able to see is you guys want to be able to see the market give you maybe some type of impulse move. Okay. Usually you're going to pretty much always get an impulsive move that's going to help you identify, okay, is the market maybe showing me that it wants to go in this direction? So impulse moves are going to be different, right? And for me, this counts as an impulse move. So if I were to take my trend line, okay, sorry, from the top of this wick down to the bottom of this move, that's about 275 pips, which is a good amount of pips for gold. It's still a good amount of pips for gold, but you know, gold be moving, but that's still a good amount of pips for gold, right? So this has been a 275 pip run. That's a sell, right? So what am I now going to be thinking? If it went 275 pips to the downside, it might be a possibility it maybe wants to keep going to the downside. But before it does that, what do we need to happen? We need a retracement and or pullback, okay? We need a retracement and or pullback. So keep in mind, we are still on the 1 hour time frame, and I've already identified all of this information I'm teaching you guys, okay? Now, for me, the next step is going to be pretty straightforward and simple. The reason why you guys see me have so many different hourly time frames is because I'm going to now use these hourly time frames to see if I can find what I'm looking for as far as my entry candle. Okay. Word of advice, the way that I trade, I am almost never going to use these lower time frames until I already find my entry. So once I find my entry candle, I can scale within lower time frames within that candle, but I'm not going below the 1 hour to identify structure or an entry candle. Straight simple. Made the biggest impact in my trading by sticking to the higher time frame bias. Okay. So from the 1 hour, I'm not going to go in this direction. I'm going to start from the 1 hour and start working my way up. And now the thing I want to be able to show you guys is what I'm now looking for is institutional candles. Here's one, right? But that's on the 5 hour. My goal is to be able to find the biggest and best looking institutional candle on the highest time frame. So the 5 hour has an institutional candle, but I'm not going to stop there because there are other time frames I can have an institutional candle that's bigger and looks better. So let's go to the 6. 6 hour has one. 7 hour has one. 8 hour has one. It's pretty ugly. 9 hour has a really ugly one. 10 hour has a really ugly one, right? When I say ugly, you would like to see an institutional candle not have such a big wick on it, okay? Notice how on the 5 hour, how the wicks are relatively smaller than the 8 hour that you see. This wick is gigantic. Then on the 9 hour, this wick is gigantic as well too. So basically what I ended up coming to is you can see between the 11 and the 12 hour time frame, these are going to be the highest time frames that have an institutional candle, because past the 12 hour, neither one of these time frames has an institutional candle. I need an institutional candle to be able to determine if I'm going to get in the trade. And then whenever I find an institutional candle, I still got to determine where exactly am I going to put my entry. Okay. My stop loss is always going to be above the highest point of the wick on the institutional candle for a sell and below the lowest point for a buy. Okay. So that's pretty straightforward. I always add 2 pips of spread just to be able to give me a little bit of breathing room in case the market does give a nice little pullback. So what I ended up doing was I ended up settling on the 12 hour time frame. So basically what I'm showing you guys is this is how I go about seeing if I want to take a trade, right? And this is how I'm going to identify if I can find an entry candle. If I were to flip through all of these hourly time frames and I did not see an institutional candle that I like, it just wouldn't have been a trade for me to take, regardless of divergence, regardless of the extremes being hit. If there was no institutional candle that I liked, I couldn't have taken a trade because that's my entry candle. So yeah, it's going to be situations to where I see divergence, I see the extremes, but there's no entry candle. So I just got to wait or just pass it up altogether, right? So if I come back down here one more time, what I want you guys to look at, the biggest thing that I want to be able to teach you guys whenever I'm trading a strategy, you need the RSI and or TDI to be doing basically the same thing on every time frame. So even though I was on a 1 hour, whenever I started looking for the divergence and the extremes and all the other stuff, I'm not taking an entry off the 1 hour. I'm taking an entry off the 12 hour. So if I ended up settling on the 12 hour, I still need to see the divergence showing me something similar. Okay. So I still need divergence or I still need the extremes, because like I said, you're not always going to get divergence, but you should still have the market in the extremes, because in this situation, if you guys are actually paying attention, there is no divergence on this chart. Okay. There is no divergence. The market is doing the exact same thing on the RSI as it is on the chart. Okay. So the next thing we want to be able to focus on is, do we have the extremes being hit? We clearly do. This right here, as I told you guys, whenever you have the market dip outside of that purple box, it's going to have to come back in the purple box. So if it dips out on the upside, it's going to have to come back down to go in the purple box, which is going to indicate selling momentum, right? So this is another confirmation I'm using, right? I have the extremes clearly happening on a 12-hour, which could be a very, very strong indication because it's such a high time frame. Okay. Now, from here, the way that I usually go about my entries, without going into too much detail, because I'm not going to spend too much time on my entry because it's very specific, I like to be able to take the 50% of a candle. So what you guys can actually do is, if you take the Fibonacci, right, and go to settings, you can actually create different templates. Okay. So this is just going to be a regular fib retracement template. If I go to templates and hit 50 level, this is going to be a different type of Fibonacci. This is only going to represent the 50%. So you guys can actually take a screenshot and make yours look exactly like mine. You could change the color if you want to, but 0, 1, and then 0.5. Then what you could do is you can save as and then name it as a template. So the way that I like to be able to utilize this is, I like to be able to take, as you guys can see over here in this example, I like to be able to take the 50% of the institutional candle. I will never take a trade without taking the 50% of the institutional candle initially. Okay. Now, I may not put my entry exactly on the 50%, but this is now going to give me a range that I can trade in, because what I like to do is I like to be able to trade within the range of the 50% and the opening of the candle. So this entire zone right here ultimately is where I would have initially been looking for, as far as like a general area to be able to look for selling opportunities. Since I've already identified, I have all the confirmations to take this trade, right? So obviously you have to get more specific, because you can't just have a generalized area. You have to have a specific entry. I don't do market execution unless I am seeing the setup too late. And at the point that I'm seeing it, it's already at the entry. I'm usually almost always going to do buy limit and or sell limit. I don't do buy stops. I don't do sell stops. Okay. So I usually always do pending orders. Now, the thing that I want you guys to be able to understand is I have another confirmation. So some of you guys may not be familiar with, utilizing EMAs and things like that. Now, I have 5 different EMAs that I utilize. Okay. There's going to be a strategy that person take advantage of called the DeLorean. That is something I will be teaching a little bit more. I'm not going to go too much in depth in it, because we already have an individual that teaches it from top to bottom. So I'm not going to try to outdo that person, because that's pointless. Right. But within these 5 EMAs, you guys can understand these 5 EMAs help me identify a few different things. It helps me identify trend. It helps me identify support, resistance, structure levels, and potential pullback areas. Okay. So one of the dopest things I'm able to utilize these indicators for is whenever I'm trading certain strategies or certain styles, my main style of trading is basically what I'm showing you: divergence, extremes being hit, the market hitting the peak, and then, retracing in the overall, bullish move, or retracing in the overall bearish move, right? So this aqua line right here is going to count as almost like the equilibrium. So the aqua line, which is going to represent the 50 EMA. So the 50 EMA and the 200 EMA are going to be 2 of the most popular EMAs in all of Forex trading. Okay. 50 is going to be aqua. The 200 is going to be the white. The 50 is going to be an EMA that the market is literally always going to pull back on, no matter what time frame. Now, obviously, when it's going to pull back and how long it's going to take to pull back is an entirely different conversation. But what you can start looking for is whenever the market starts getting further away from the aqua, there can be opportunities that you can utilize to predict, okay, maybe this is going to be the time where it pulls back to the aqua and I can take advantage of the sell back to the aqua. So on top of all the other confirmations that I just utilized, look how far away the aqua is from gold. Okay. So from the closure of the bottom of this candle, that's almost 400 pips away. Right. And I'm looking to enter from up here. So that's really about 500 pips away. Right. So this is just another confirmation I can utilize to see, okay, it does make sense for me to look for a sell, because this market needs to pull back to the aqua. Right. Obviously, it didn't have to pull back at the time I'm looking to sell it, but just another indication I can utilize. Okay. And then finally, the last confirmation for anybody that's like a technical analysis trader, right? Because I consider myself technical analysis as well as a sentimental analysis trader, not fundamental though, because I personally don't care about the news at all, right? I I like to be able to take advantage of patterns, okay? One of my favorite patterns is going to be the head and shoulders pattern. So what I'm actually show you guys is I'm going to let this market play out so you guys can see exactly what happened. So if I let this market play out, you guys are going to see it ended up pulling back, right? Play it out. And then it ended up giving us that drop, right? And boom, okay? So I don't need to let the whole thing play because obviously when the video started, you guys kind of saw it drop. The thing I want to be able to show you guys is this is going to be an example of a head and shoulders pattern. So one of the dope things about trading is whenever you trade so much, right, in the market, you're eventually going to start noticing, right, different patterns in the market, okay? And one of those patterns can be something like this, which is called a head and shoulders pattern. So a head and shoulders pattern is basically going to be a selling formation. So you have a shoulder, you have a head. Either one of these two little areas could be considered the right shoulder. It really doesn't matter. The context of it is if you can identify a head and shoulders pattern, you can be identifying an opportunity to possibly take a sell, whether it be a swing trade, a scalp, or an intraday trade, okay? So this was one of my final confirmations to be able to feel confident, you know, to take the trade. And then as you guys can see, the distance that it ended up going. So this trade actually ran about 800 pips. As of right now, I'm no longer in this position. I do have a final take profit down here. I did not hold the trade for that just because at that point I had made the money I wanted to make. And I felt like now that the market gave this big ass drop, one or two things is going to happen. It's already been consolidating for quite some time. So it's either going to keep dropping or now it's just going to give a mean ass pullback. I personally don't want to be caught in a pullback at this point. I'd rather just close out my profit deep in profit versus having to pull all the way back. But that's me. And all in all, this is going to be an example of how I was able to show you guys, right? An example of a setup that I take, a trade that I take. And as you guys see me make more videos, you're going to start to notice basically every single setup I take is almost identical down to the T. Okay. Now, with that being said, if you guys were able to come watch this video, you enjoyed the video, you learned something from the video, you're going to share the video. Let me make sure y'all go ahead and hit that subscribe button because remember, once again, you need to subscribe so you can be the first person to get the video. I don't want you to see the video at the end of the day whenever you could have saw at the beginning of it. That's just not what I want, right? Next thing I would appreciate is if you guys go ahead and hit that like button because the like button is going to show YouTube I'm providing value. The next thing I would appreciate is if you guys can hit that thumbs up button because, you know, the thumbs up is going to be showing you guys that, hey, you know, that boy Tyree is doing his thing. And then finally, please make sure y'all like, comment, share the video. Don't be selfish with the information. Please spread it. And then finally, I'm going to see you guys at the top, not front of top because the bottom is way too crowded. See you wouldn't want to be a, I holla. Peace.